So where is the S&P 500 going in 2024? Check out my quick 10-minute analysis video looking at the structural confluences, the operational landscape for 2024 for the S&P 500, and most importantly, where those targets are. So we're at the start of 2024 and it's very important to set out that operational landscape for the instruments that you're trading. So I'm going to do an example today on S&P E-mini futures. Good indicator of where all markets are going, and what I'm going to do is talk through setting that operational landscape for the rest of the year, or for at least the first quarter anyway. So in my book, Confluence Not Coincidence, I talk about setting that operational landscape, framing those charts, using technology and confluences to really understand where those big supports, those catalysts could be, and that sort of thing. So I'm just going to do a very, very simple video now. This is the weekly chart to begin with. I want to understand where we are in the current behavior and flow. And I've got the Elliott Wave indicator suite here, NinjaTrader platform, because some of the software that we develop is very, very powerful on NinjaTrader. So what I want to talk about really is where we are in the trend for S&P, longer term trend on the weekly. So I'm going to just zoom in a little bit here. So Elliott Wave, really we're looking for, it's used to measure trends. So right now, last year we had a nice pullback on a wave 4. It actually hit the wave 4 in what we call the red pullback zone. So there's 75% probability it's going to go on and hit that new fifth wave target around about 5, in the middle of there, 5,422. We also had that confluence of a daily zone, of a weekly support zone here as well, where it bounced off there from these previous ones in the previous wave 3 trend. But I'm also about behavior. Did this wave 4 behave well? Is the fifth wave behaving normally now? So what I want to do is just highlight some things in here. So some of the things we look at behavior, first of all, did it pull back into one of those fib zones? Yes, it did. And also we had that confluence of that weekly support zone. But moreover, we look at the Elliott Wave oscillator right here. Usually the third wave is the strongest impulse wave. So you can see on the oscillator here, this is where those highs are on the oscillator. During the fifth wave, we usually see that oscillator is lower. There's divergence, oscillator divergence in there. So this yellow line is the high, and we can see at this moment in time, the fifth wave is behaving normally. It's taking its time. It's there's more volatility, but in overall, it's moving in the right direction, and the strength of this move is less than the wave 3, which is normal behavior. The next thing I always look for is we have a false breakout stochastic, part of the Elliott Wave indicator suite, and we see the yellow dots here during the wave 3. That denotes that in the overbought zone, the stochastic continually tried to come back out, and then we had that false breakout and it came back in again. So that denotes a really strong trend. And then when we pull back against that strong trend on a wave 4, we look for the wave 4 to clearly happen, pivot, cross the oversold zone. This is at 20%, not 25. So it's got some work to do, and it did. So this is where we crossed over, right where the wave 4 pivot is on the weekly time frame. So behavior is all good. And then we start to get the false breakouts on the fifth wave move, which denotes a really strong bullish trend towards that fifth wave target. So as far as trend behavior for ES is concerned on the weekly time frame, we're meeting all the criteria, which is really good. What I want to do now is I'm going to go to the daily time frame to help us understand those confluences and to see where things could happen this year. So I'm going to go to the daily time frame. So those same channels are on there, and that's that fifth wave target zone as well. But what we've got on here as well now is we've got the weekly and the daily support and resistance zones. They're provided by our Guardian zones, so they're automatic. A lot of logic goes into actually confirming those. What I want to talk about more though is the confluences. So we're gonna start where we are now and move back for scenarios for the rest of the year. So again, we're setting that operational landscape ready for the year. So where we are right now is very, very important. So on the previous wave 3, we see this green ellipse here, where we were continually touching this trend line all the way up here, which gave us a really sort of narrow and strong bullish trend channel here. So we can see here where we got the continual touches here on this weekly channel, and it was the start of this weekly support and resistance zone in purple here. We can see it was touched down from above here, from below, and it started to form this. And then later on, when we come into just after the summer of 2023, we can see actually we tested this from below and also formed the second pivot of this upper trend line for this current bullish channel that we're in now for the fifth wave move, and it rejected those severely. We came back down to test. We're back up there now, and this is really, really important. So right now we are, what date is it today? We are Tuesday the 9th of January. On the 11th we've got CPI data. When in the book I talk about confluences, we also talk about those catalysts that actually break confluences or actually increase that directional flow, and CPI could be that, because we've just pushed through this weekly channel but then came down to test the weekly support zone here at the center line of the channel. So why do we have a center line of the channel? The basics are it's the line of best fit for that whole trend, if you like. We can see there's multiple touches clustering around that center line just here, that sort of thing. So it's really, really sort of the line of best fit. And when we get that confluence of pushing through, then coming back to test the support at that center line and at the weekly zone where we've seen previous confluence, this is really strong support. So all we need now, that last bit of information, is that CPI data coming out. Now, this really is the catalyst that we're looking for. I'm not going to say, not going to predict what's going to happen, but right now we've got that if scenario. If that CPI data comes out and the market likes that data, that will be the next confluence to actually increase that flow to the upside. Conversely, we need to look at what happens if there is a complete, the data's not as expected, markets react differently, or later on in the year, if we hit that zone and something else happens, what's going to happen? Yes, we've got this recent weekly zone, but if we have a really large correction like we did in 2022, we have to understand where those other confluences are. So we've got them on our chart. Remember, the weekly and these daily zones are automatically put on by the Guardian zones on NinjaTrader. But we need to understand where also those previous sort of channels converge, and we get those confluence of both linear and non-linear support and resistance. So we have one here where we can see we tested this really strong wave 3 from the Elliott wave on the weekly at this point here, and then we came to test again at this point and rejected it here. So this weekly zone, and now there's a confluence, there's an overlap of those daily zones as well, is really, really strong. It's quite a wide zone, but if we have a dramatic or a big correction, it's almost like a sponge, if you like. We need a big wide zone for it to go into, and for traders to see that this is a good time to buy when they're looking at some of the bigger stocks that make up the S&P 500 and they've all had that correction. If they think that's a really good time and this will help that decision, then buying will start to happen. Conversely, we've got another one which is slightly lower, but again we've got that confluence between linear and non-linear happen more than once. Okay, it has to happen more than once for it to be a confluence, and this has happened here. So again, if this fails, this really is our last chance saloon. If not, we're going to come down quite dramatically. But again, when you're setting that operational landscape for whichever instrument that you're trading, you need to understand that longer term trend. when we look at that weekly, where we are in the trend, how we measure that trend. And Elliott Wave is very, very good for that. You may not even use Elliott Wave for trading, but understanding the trend behavior is extremely important, especially for the longer term. Where those targets are, is it correctional? Are we in a longer term trend, as we can see with the S&P 500 here? And then obviously when we talk about that, and again, check out the links below to my book, Confluence Not Coincidence, because it's not just these confluences, it's outlying confluence as well, with those data points, those CPIs, and you know, more geopolitical, that sort of thing. So check out the book, because I think really understanding that operational landscape is important for whichever instrument you do. I mean, to be honest, this is just the S&P. I trade copper and oil quite a lot, and that's one of the things I'll be doing after this video, is actually working on those to help me. Even if I'm day trading, I need to understand what's going off, where the overall trend is, where those confluences are, strong support, strong resistance, confluences of both linear and non-linear. You know, I will be looking even more at the catalyst for these rejections. You know, was it big data? You know, do that research, understand why those confluences happened, and most likely they could happen again at that sort of area. So getting that operational landscape is really cool. So check out the links below in the description. We have the book, Confluence Not Coincidence. We have the Guardian zones, so those automated support and resistance zones. And everybody that's a series trader should have that Elliott Wave indicator suite, just to understand that overall trend, measure the trend, and see where those targets are. Hopefully that helps. See you all really soon.